Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Tuesday morning and the cues are fairly positive given the fact that Wall Street clocked a fifth straight day of gains yesterday, and the GIFT Nifty, of course, is hinting at the start above that 19,800 mark as it was doing yesterday as well. But what we saw was a fairly volatile session, and we'll have to see whether or not we are in for another volatile session today or not. Lots of sectors and stocks in focus this morning. Of course, we'll be talking about the IT space in details. In the wake of some reports, brokerage reports coming in on the texture of recovery that we can see going forward. So we will be talking about that. We'll be talking about all the stocks in news. We'll also be getting all your stock related queries answered by a technical expert on the show. So if you have any queries, as usual, send them in to us on our YouTube feed and we will have them addressed. But before we move any further, let's take a look at the top headlines at this hour. Wall Street edges higher with the Dow and S&P 500 gaining for the fifth straight day. Tech-heavy Nasdaq hits a 22-month high. Investors will watch out for earnings from chipmaker Nvidia and the minutes of the last Federal Reserve meeting later tonight for further clues on the interest rate trajectory. Asian markets trade largely higher with Kospi and Shanghai clocking decent gains in early trade. The GIFT Nifty, as I mentioned, is indicating a higher open for the Indian market. Crude is back at $82 per barrel mark on speculation of deeper supply cuts by the OPEC Plus at its meeting on the 26th of November. The oil cartel may look to shore up prices amid concerns over the global economy and as well as demand. Among stocks in focus this morning, Rategain raises 600 crore rupees via QIP. Also in focus will be Sunteck Realty after Motilal Oswal initiates coverage with a buy rating. And the 2,100 crore rupee IPO of the Indian Renewable Energy Development Agency, India's largest pure-play green financing NBFC, opens for subscription today. The issue is the first public sector IPO since LIC in May 2022. The ousted OpenAI CEO Sam Altman will join Microsoft as part of the company's new AI research unit. Meanwhile, hundreds of OpenAI employees also threaten to follow Altman unless the board resigns. Well, on that note, let me bring on board our first guest for today. Joining me is Sacchitanand Uttekar, VP Research Derivatives and Technicals at TradeBulls Securities. Great to have you on the show as usual, Sacchitanand. Yesterday, we had a fairly volatile run. We were hovering around that 19,700 mark for quite some time. Would you expect the kind of volatility we saw yesterday to continue into today? And secondly, when you talk about the Nifty Bank Index, 44,300 is the next support that many analysts are really talking about. Would you also expect that level to act as a crucial support level on the Nifty Bank Index?
Good morning, Nandita, and thank you for having me on the show. Clearly, if you look at yesterday's price action, both on Nifty and Bank Nifty was significant. We saw an inside bar formation on the daily scale wherein the Nifty remained confined within its previous day's trading range. But if you look broadly, it has been facing some resistance at around 19,800. But on the lower side, it has been maintaining itself well above the 5-day exponential moving average, which is placed at around 19,650. So I think this particular range, which was getting squeezed, probably we may see a very strong breakout in the coming session or probably in today's session itself. The way its daily ADX is placed at around 24, it is ready to move above the 25 mark. And if you look at the options data as well, it is fairly indicating that 19,600, 650 support cluster should act or should hold on to this existing ongoing consolidation. And probably there's a good chance that we may see the Nifty ejecting above that 19,800 mark soon. And we may see this particular rally getting continued towards 20,000, 20,100 during this particular series itself. So we are optimistic when it comes to Nifty. Even on Bank Nifty, there has been a fair amount of, relative underperformance. But if you look at yesterday's trading data, as you rightly said, 45,300 is where its 200-day exponential moving average is placed. And within that particular cluster, we have already seen a kind of a spinning top formation getting established or reconfirming that particular support base yesterday with an extremely oversold condition when it comes to the PCR. So I think there's an extreme pessimism going on in the market when it comes to Nifty Bank. And probably the moment we see it turning around, we may see Nifty Bank eventually crossing that 44,400 kind of a zone as well. So we are expecting, markets to turn around. and the momentum to continue when it comes to the Nifty itself. So we are optimistic on the market, keeping a stop loss summit close to around 19,630 on a closing basis. One can be aggressively long when it comes to Nifty.
All right, one can be aggressively long when it comes to Nifty, and of course there is a little bit of pessimism building around the Nifty Bank Index. But hold that thought, Sacchitanand. One sector that has seen a lot of optimism over the last few months is the IT pack. Although there has been issues over demand, earnings haven't been all that great. You have muted earnings from the IT pack in the second quarter, but hopes of recovery have been driving IT shares higher in trade over the last few, in fact, months, so to say. But let me also bring on board Ashutosh Sharma, who's from Forrester Research India, to understand what is happening on ground when it comes to the demand situation, client budgets, as well as whether or not one can bake in some bit of recovery this fiscal itself, or will it get delayed to the second half of the next fiscal. Great to have you on the show, Ashutosh. As usual, the rally that we have seen in the IT stocks have been largely on hopes of recovery, so to say, in the last quarter of the current fiscal. But would you say that there could be some bit of risk of delay in recovery to the second half of FY25, given the fact that we have had a couple of brokerage reports who have flagged off that there is no visible improvement in the demand scenario, at least?
Good morning, Nandita. First of all, thank you for having me on the show. Nice good morning to all of your viewers. This is right. I remember being with you about, I would say, 9 months ago when we looked at the sector. And at that time, personally, myself and overall, we at our organization were forecasting a fairly decent revenue growth, IT spending growth across the globe. We were thinking of just under 5% across the globe, but we were thinking it'll be backloaded in the year. But I just last week took a census of all the different analysts that we have in the organization, and we figured that it's probably getting delayed. So I have a bad news in that sense, that I don't expect the demand environment to become positive at least till Q1 or Q2 next year. So more likely Q2 next year. So Q2, when I say next year, then the financial year 2025. I'm assuming, yes. So right now, most of the demand that we expected to come has not come. Clients are delaying their projects. There's a lot of uncertainty that has crept in across global markets, especially North America. And we are not seeing as much demand as we had expected for IT services. However, on the other hand, IT services organizations are trying to ride the newfound the wave of the AI revolution that started to happen across the globe. So there might be some bit of tailwind, but it's not going to be significant. I think in the beginning, it's most likely going to optimizing their own internal operations and code delivery and things like that. But the demand that's going to emanate from AI and other things is still going to get pushed out. So yeah, not happening in the short term, certainly in FY25.
All right, talking particularly about, the Q3 earnings, the next quarter, so to say, revenue leakages are expected, of course, when you talk about the BFSI vertical, the telecom vertical. But do you think the cloud services could emerge as a silver lining going forward? Or do you think that upcycle is also bottoming out now?
So cloud services will obviously continue to grow. However, the pace of growth has slowed down in certain cases because we are seeing a number of clients re-looking at their cloud investments and figuring out where exactly should they optimize them. We are seeing some new clients coming in and figuring out how they can optimize their cost and make their systems more resilient by adoption of cloud. But then the cloud itself means multiple things in the sense that it's not just the public cloud. There are multiple options that the organizations have when it comes to cloud using even their internal private clouds or software as a service sort of options. So there will be a rationalization in terms of the workloads that organizations run in their environment, and they will continue to move towards more resilient cloud type of workloads. So that will lead to a little bit of growth, but it won't be as high as we had predicted earlier in the year. There will be a lot of software growth, though, that we expect. The beginning of the year, we expected 8.5% growth for the year. It's going to be a bit muted, but still fairly significant. I would say still above 7.5% or so for the year. So that means as organizations buy these software, they'll have to ultimately go ahead and deploy them. So there is a optimistic scenario in the sense that organizations will still need to implement this, and that demand is likely to come. But at the moment, it's getting pushed out. It's getting right shifted essentially.
Right. I also want to speak to you about demand, particularly in North America. Of course, Europe remains a spot of bother, but with hopes building that the Fed could be at the fag, and in fact, it could have already reached the end of the rate hiking campaign. And now, of course, we are waiting for signs as to whether or not we could see early rate cuts somewhere around April or thereabouts. There are murmurs in the market that we could see more aggressive rate cuts in the coming year. Could that expedite some bit of demand recovery in North America at least?
Yeah, certainly. Obviously, rate cuts are going to be fairly, much desired, Philip, that the industry needs. But that's totally up to the Fed and when and why it's going to happen. And I'm not a good predictor of whether Fed will do it. Fed will do it at some point. But if they do, yes, that's going to give you a significant boost, especially in the US. Right now, the demand environment is not as good as we expected. So anything that the government can do to kind of give a boost to that, I think it was happening a few years ago, but in the last, I would say 18 odd months, we have seen sort of that getting tapered down in a significant manner. So the rate cuts would certainly be a positive if and when they happen.
All right, running out of time, last question really, of course, management commentary around margins have been fairly, margin stability rather, have been fairly positive and optimistic, right? But do you think going forward, even as hiring has slowed down, margins will be maintained, but any other margin levers that are in place that could actually, signify that or hint at the fact that margins could actually get better going forward?
Yes, and like I said in the beginning, organizations are looking to optimize their delivery as much as possible. And one of the things that has started to come in is automation, a significant amount of that, especially in delivering services to their clients. And some of the leading firms have invested a good amount of money in delivering such as code automation. And we are seeing that getting built into even some of the IT products, technology products that organizations buy. And that leads to, I would say, significant savings in terms of the developer effort that goes into building out. That would be one lever. However, organizations or the buyers are becoming also fairly smart, so they will like to partake in some of those savings. But still, overall, it's going to be positive for the environments for the enterprises to, especially IT services companies, to kind of benefit from that productivity gain. And that's the most immediate impact we're going to see when it comes to IT services delivery in terms of deploying AI tools to improve developer productivity and things like that.
Really, with what's going on at OpenAI, of course, would you say that there could be some bit of threat to the future of AI, because we have seen quite a few companies forging AI deals with the likes of NVIDIA and, Microsoft as well. So what is your take on what's happening in the OpenAI space at the current juncture?
No, I wouldn't go as far as saying there's a threat to the AI. In fact, I'm super impressed by what Satya has been able to pull off in 48 hours, pretty much. I'm sure some of it was probably in the making. And I think overall the future of AI is still bright, and there's a lot of development happening, and OpenAI has sort of paved the way. But the amount of investments that we are seeing across the globe in AI, including in China, which is building its own capabilities, as well as in India and other places, there's a ton of investments, and there's a lot of things happening. And OpenAI is just one of the, I would say, small cog in the wheel. Even before this whole thing played out in over the weekend, the AI juggernaut was already rolling. And when it comes to generative AI, we believe this is probably the singular most significant event that we have seen in technology industry in, I would say, last 30 years. So I don't think that's changing. And we will see more and more AI investments, more and more AI growth and its application across a number of use cases and number of scenarios across enterprises.
All right, of course, the future of AI is intact, obviously, and the juggernaut, so to say, has already taken off. With that, Ashutosh, as usual, great having a chat with you this morning. Look forward to touching base with you when all the Q3 numbers start trickling in.
Yeah, I hope Q3 turns out to be better than I'm hoping, but yeah, certainly.
All right, it's always a pleasure chatting with you. Thanks a lot for joining
Same
me.
here. Thank you.
Well, with that, let me go back to Sacchitanand. Sacchitanand, we heard what Ashutosh had to say about, the recovery in IT. But, if you look at the stock performance, we have seen IT stocks holding up and how. Would you now concur with the fact that, there could be more upside going forward for some of these IT names? Or do you think we have seen, the stocks run way ahead of their fundamentals, and perhaps it's time to cool off a bit?
Well, Nandita, I think the rally has just started. In fact, if you look at last 2 months, we saw Nifty IT, displaying a decent corrective wave. This particular wave, was ended, got ended near to that 30,400, 30,300 kind of a zone where its 200-day exponential moving average was placed. And from there, last week, we saw a strong gap up opening move, and the rally has been continuing. So I think the major trend when it comes to IT has again been resumed on the higher side. We are of the opinion that we may see 33,000 mark, getting achieved soon, but eventually we see this particular rally getting continued towards 34,900, 35,000 kind of a zone. So I think there's a good, strong rally, bullish, strong momentum which is already in play, and any declining opportunities, should be utilized to create further long positions when it comes to IT.
All right, you could look at further long positions in some of these IT names. But on that note, let's talk about the stock of the day. Rategain Travels, of course, the company has raised 600 crore rupees via a QIP at a discount of nearly 5% to the floor price. Looking at the stock, over the last 5 days, it has gained a decent 6% or thereabouts and has done well in the last 1 month. Do you expect the stock to rather make a dash at somewhere around 750 or thereabouts pretty much in today's session, given the fact that it has already hit a 52-week high of 733 or thereabouts in the last few sessions?
Well, the stock is locked in a very strong bullish, secular bull run. And if you look at its performance on week-on-week basis, the major support comes somewhere close to around 695, where its 5-week exponential moving average is placed. And it has been, trending above this particular average since almost 8 weeks now. So any opportunity on the lower side would be more fruitful. On the higher side, because of the run-up, there is an extreme overbought kind of a zone displayed by some of its oscillators. So, going forward, any move towards 750, should be, a move of, displaying cautiousness. And probably, if you are holding on to this particular counter from a positional perspective, the right stop loss could be somewhere close to around 660 on a weekly closing basis. But I would rather buy this particular stock on a decline rather than, chasing its momentum.
Right, buy on decline is the call on a rate gain rather than chasing the momentum. But let's talk about a Mankind Pharma now. Sacchitanand, the stock has hit a fresh high. In fact, has clocked, or in fact has rallied past the 2,000 mark. We have a query coming in from Monam Chattopadhyay, who wants to know your thoughts on this stock. Of course, a breakout stock, so to say. Do you think one should chase momentum here, or do you think here as well one should look at a buy on dip approach?
Well, we have almost 6 months of data here, and for the last 4 months the stock was consolidating. It has already managed to sustain and display a closing about the 1900 mark, and post that we have seen very strong momentum play. Expecting this particular momentum to continue and get carried forward, we may see a swing towards 2140-45, and probably one can continue chasing this particular move with a stop loss somewhere close to around 1930 from here on.
Right, maintain stop losses at 1930. Hope that answers your query. But let's talk about an M&M now. We have a query coming in from Zarina Sethia. wants to know your thoughts here. Of course, this was among the top losers on the Nifty yesterday. Auto as a whole was not doing all that well in yesterday's session. In the last 1 month as well, the stock has really turned sideways. Would you say that two-wheelers are looking more attractive on the charts at the current juncture?
Well, certainly, yes. If you look at the performance of Bajaj Auto, TVS, they are already scaling near their life high zones. We also saw Hero MotoCorp, breaking out of a consolidation of late, and somehow the price performance is looking better when it comes to two wheelers. If you look at M&M, we have already seen a very strong display, a very strong positive up move in the last few months, but of late, since last few weeks, the stock has been consolidating. It has been facing a lot of pressure near to that 1600 mark, and on the lower side, it has been trying to establish a base somewhere close to around 1500. So probably we may see this particular oscillation mode getting continued, but eventually, it looks like a more like a time-wise consolidation. If you look at the major trend, it still remains bullish. The moment we see this particular stock trending confidently above 1620, we may see a very strong rally again resuming towards 1840 kind of results. I think it's a very, very good stock to hold on to. On a declines up to 1500, the view remains to accumulate. On the lower side, one can keep a stop loss semi-close to around 1475 on a weekly closing basis for a positional target of around 1840.
All right, that's the call on an M&M. But let's talk about Lal Path Labs now. Urva wants to know your thoughts on this stock. From the diagnostic pack, would you say that Lal Path is looking much better than the likes of Vijaya Diagnostics? And if yes, what are the kind of stop losses or targets one should maintain there?
Well, when we look at the overall structure, it is definitely a very strong one. In fact, it has displayed a very good rounding bottom formation on its monthly scale. We have already seen a very strong breakout move, at around 2450 kind of a zone. We again saw a pullback and the resumption of the rally. So I think the major trend for this particular stock has, been established on the bullish side now. It was more consolidative. Now the uptrend has just resumed. And on its monthly scale, its monthly ADX is still trending around 22 levels. So I think there is a fair amount of upside which is yet to be unlocked. We are of the opinion that this particular rally could get continued towards 3600, 40 kind of a zone. From a long-term perspective, we have recommended this to our clients. From an immediate perspective, it's better to wait for the consolidation to mature. On the higher side, the moment it starts trending above 2800, 2820, we may see another strong leg on the higher side. Keep a stop loss somewhere close to around 2590 and keep accumulating this stock even from a trading perspective.
All right, that's the view then on Dr. Lal Path. I hope that answers your query, but I think we are running out of time on that note. We won't be able to take up any more queries. But before I come to your picks, what are your thoughts on Oberoi Realty and a Suntec Realty, Sacchitanand? We have, in fact, a positive brokerage view coming in on Suntec Realty this morning. Motilal has initiated coverage on the stock with a buy rating, target price of 640 or thereabouts. And Oberoi Realty, of course, we saw a very healthy run coming in on the stock, given the fact that it is looking to foray into the Delhi NCR market. It has launched a property in Thane as well. So good going for Oberoi Realty. So, on these two stocks, what are the levels you'll be watching out for?
Well, Suntec so far has been underperforming. In fact, it has, if you look at the history, since 2018, it has not managed to surpass that resistance zone at around 520. So probably we may see this particular move getting continued on the higher side, but we may see a good amount of supply coming in at around 520, 510 kind of a zone. So the choice still remains, when it comes to, most of this real estate stocks, this choice still remains to create some long positions on a stock like Oberoi Realty or something like DLF. But Suntec is something which I would like to avoid.
All right, that's the call on some of these realty names. But very quickly, Sacchitanand, what are you recommending for our viewers this morning?
Well, Nandita, I think the major contributions should be from the banks, and Nifty Bank is something which I think should be in your radar for today's session. We're expecting a good recovery when it comes to Nifty Bank, and that's why two of my stock picks are from the banking space. Both are large caps. Kotak Mahindra Bank, we have already seen it consolidating well within in the last 4 trading sessions. Its daily ADX is about to shoot about 25 marks, so it is a good sign of upcoming momentum. We're expecting a rally towards 1810, and that's why we have recommended this particular stock to our clients. 1765 should be your stop loss. The other stock, from a long-term perspective as well as from a trading perspective, which is looking good, is HDFC Bank here. We have already seen, it consolidating well, forming a base at around 1500. It has managed to, establish a close above its 5-week exponential moving average. And yesterday we saw a bullish crossover on its 5 and 20, days exponential moving average, which is again a sign of upcoming bullish momentum. From a positional perspective, we are expecting a rally towards 1555. From a trading perspective, 1535 should be your target. The stop loss should be maintained at 1503, and long positions can be added in HDFC Bank as well. And a sell call on MGL, we have already seen a breakdown yesterday. It was holding on to its near-term trend line, but eventually we saw it declining below that 1050 mark. We're expecting this particular move to continue on the lower side, which can push the stock towards its 200-day exponential moving average, which is placed at 1015. And that's why we are recommending building fresh short positions in MGL with a stop loss at 1046.
All right, those were the recommendations coming in from Sacchitanand. With that, Sacchitanand, as usual, thanks a lot for taking out time and joining in this Tuesday morning and addressing all our viewer queries as well. Well, with that, before I go, I just want to remind our viewers, we have a new IPO kicking off. It's the IREDA IPO. This is the first IPO by a government-run company since LIC back in May 2022. And this will be, of course, kicking off for subscription today. Issue will be closing on the 23rd of November. And, the price band is set somewhere around 30 to 32 rupees a share. Whether or not you should subscribe to it or not, well, get some analyst views on our website, moneycontrol.com. Log in and get a sense of whether or not this is a subscribe or an avoid. But of course, they're completely timed out on this edition of Morning Trade. Thanks a lot for tuning in. But of course, don't go anywhere because coming up next is Opening Bell.